Namaste, good morning, friends, and welcome to revision sessions. Okay, uh, okay. How we are going to plan our revision sessions is something like this. There is 4 sessions, and today morning I want to hit at the chapter which always you feel that it is challenging. We start with PGBP. When we start a chapter, we see the amendments first, and then because most probable questions come from mostly amendments are tested, and since May exam did not happen, so there is more chances only all the amendments can be tested only in November. So we just check at the amendments. Majority of the amendments we have seen in the classroom, so it's not going to be something new. Fortunately full of May and November people. So you will see the amendments quickly and then browse through the theory once, and then as we solve the solutions, as we solve the questions, we will understand the theory once more so that we are clear about it. Post classes, I will also share with you the link of the video. Already the revision material is shared, but the revision material might have some additions, might have some small changes. Okay, so till tomorrow evening, keep the revision material little flexible. Uh, Having said all these things, I'm not saying that the session timings will remain the same, etc. The session times might also undergo small changes depending upon the completion levels. Okay. And one thing is, I saw your, I was there for your IDT classes for some time, but I'm not very comfortable in looking at the chat. So let's keep, if at all there is any doubt, okay, and very often I will try to check the WhatsApp status and see WhatsApp and see what are all the doubts you have and keep answering. Otherwise, the easiest option is unmute and ask. So we will start with profits and gains of business or profession. Profits and gains of business or profession, PGBP. Profits and gains of business or profession. Okay. There are very lesser amendments that are going to be remembered by us. The amendment to remember is the rate of depreciation. That amendment to remember is a rate of depreciation. Okay, the rate of depreciation has undergone a change with regard to only motor vehicles. With regard to only motor vehicles. Okay, and the date of amendment is very evident here, that is 23rd August 2019. The date of amendment is important here. It is 23rd August 2019. Okay, on and from 23rd August this amendment takes place. So for you to understand, in our notebook have 3 columns: nature of asset, rate up to 22nd August 2019, rate up to 22nd August 2019, and third column, rate from 23rd August 2019. Nature of asset, second column, rate up to 22/8/2019, rate from 23/8/2019. 23/8/2019. So there are two types of motor cars which we are going to speak about in this. There are two types of motor car. The first variety of motorway vehicles are which are largely used, which are commercially exploited. Commercially exploited means using that I get revenue. Okay, Ola cabs, Uber cabs, state transport buses, lorries, okay, they are commercially exploited, which means using that I get the money. So write motor buses, motor lorries, and the cars used in the business of running them on hire, and the car used in the business of running them on hire, and the car used in the business of running them on hire. Friends, if you have purchased from 1st April to 22/8, or if you already have it, 30% in the next, that is up to 22/8 column, 30%. From 23rd August, 45%. From 23rd August till the year end, obviously till the year end, okay, okay, it is 45%, 45%. Next, other motor cars, that is which you, me, or any office director's office, etc., where it is not commercially exploited, that is using that I don't earn anything. Okay, other motor cars, 15%, 30%. 15%, 30%. That is the first major amendment. That is the first major amendment. Okay. Again, chances of questioning is very less because the exams are happening in November, where this amendment is not going to be applicable, because for this year it is not applicable. Okay, but it is better to know, especially at our level of objective type questions, it might be useful for us. Okay. The next amendment is with regard to payment to resident. Okay. We know this amendment. We know this section 40 amendment. Okay. I will give you an example. Okay. I will give you an example. This is an amendment with regard to TDS. Okay, payment made to a person without deducting tax at source. What happens? Let us take I paid 10 lakhs. Okay, what happens is 30% is disallowed if the payment is made to a resident assessee. Okay, so 30% becomes disallowed if the payment is made to a resident assessee. Okay, 3 lakhs disallowed. Okay, this is disallowed in the year 1920. Okay, when subsequently the default is rectified. Let us take that I rectify it in 2021. Okay, the disallowed amount is allowed. That is, this 3 lakhs becomes allowed in the year 2021, in the year 2021. Now let us for your example understand. Okay, okay, okay. Vathson paid to Sai Lakshmi. Okay, let us take that 10 lakhs. Okay, without TDS. So what happens is 30% disallowed. We all know 3 lakhs disallowed. Okay, in the next year, Watson wants to rectify the mistake. However, Sai Lakshmi informs Watson that she has considered the 10 lakhs as income and paid tax. So Sai Lakshmi comes to me and tells, boss, don't deduct this. I have already considered this 10 lakhs as income. And let us take that Sai Lakshmi is in 30% slab. So she would have paid 3 lakhs as tax for this. She will now say, boss, I have already paid this 3 lakhs, okay? And if you now again deduct 3 lakhs, okay, then it will look like I have paid 6 lakhs. Are you understanding? Okay. Sai Lakshmi will come now, me now and say, don't deduct this. Why? Because whatever tax you want to deduct for me, I have considered it as income. Okay, it's not 3 lakhs. Here I will be deducting 1 lakh. Let us take that is 10% rate. Okay, so Sai Lakshmi will come to me and say, I have already paid that 3 lakhs as tax. If you deduct 1 more lakh, it will look like I need to pay 4 lakhs as tax. So do not deduct for me. Okay, right? So if Sai Lakshmi submits proof of considering it as income, it means that 10 lakhs paying taxes, then Vathson is not liable to deduct. Then Vathson is not liable to deduct and can claim the disallowed amount. So, if Sai Lakshmi submits me the proof, okay, considering it as income, if Sai Lakshmi submits proof of considering the 10 lakhs as income and paying taxes, then I am not liable to deduct and I can claim this disallowed amount of 3 lakhs. Now, the most important thing to understand is, when will Sai Lakshmi submit the proof? So 1920 is the year of payment. Okay, 31st July 2020. Okay, Sai Lakshmi files return. Okay, Sai Lakshmi files return. So, proof will be provided by her only in 2021. Proof will be provided by Sai Lakshmi to me only after because the proof itself is what? If Sai Lakshmi submits proof of considering it as income, so her income tax returns are the proof and paying the taxes. So what will technically happen is, for Vathson, here it will be 30% disallowance. Here it will be, okay, 30% disallowance and it will be allowed here. Okay, even in this case, for me, the only difference the law has made is next year you need not deduct it if proof is given. Many people try to understand if proof is given, no disallowance. It is wrong understanding. It is wrong understanding. If proof is given, no disallowance is a wrong understanding, my dear friends. If proof is provided, the disallowed amount is allowed in the year in which I get the proof. Repeating, the disallowed amount is allowed in the year in which I get the proof. That is the difference, not anything else. So, in this current year, this benefit, okay, from FY 1920, this benefit is provided to payment to NR also. So, NR can also submit the proof. But whatever it is, first year it will be a disallowance, subsequent year it will be an allowance. Okay, so that is this 40 amendment. 43B amendments is just including NBFC. So far, okay, it has all been interest payable to banks and financial instruments, but now NBFCs are also included. NBFCs are also included. So these are all the three amendments that took place. Okay, majority of these amendments you are very much aware of it, so not an issue. Now, okay, in your notebook, okay, or rather a quick summary we always know. A quick summary we always know, right? Section, there are two income based section in your notebook. Income based section, two falling branches. Income based section, two falling branches. In your notebook, income based section and there are two falling branches. On the left hand side, section 28, direct mention of income. Section 28, direct mention of income. On the right hand side, section 41, deemed income. Section 41, deemed income. Section 28 directly mentions what are all the incomes are. Section 41, okay, is these are also known as business income, that is deemed income. Okay, right? Okay, you can put it as 1, 2, 3 and start writing, or however you are comfortable with, you can start writing. Okay, in your notebook, in the revision material, I'm in page number 21. In the revision material, I'm in page number 21. Okay, in our revision material, I'm in page number 21. Difference between profit and gain. Profit, okay, arises, okay, profit arises from regular slash recurring activity. Profit arises from regular slash recurring activity. Gain arises from one time or isolated activity. Both are taxable under PGBP. Both are taxable under PGBP, but generally the split is profit is from a regular course of activity, whereas gain is from an isolated level of activity. Okay, subsidy received as general contribution. Before looking into it, please understand subsidy is support provided by external person. Support provided by external person. Okay, the external person majority of the time will be government or it can be anyone. Okay, subsidy means support provided by an external person, and normally, my dear friends, the income tax law says if the subsidy is towards a depreciable asset, repeating, if the subsidy is towards a depreciable asset, it should be adjusted with the cost of the asset. If the subsidy is towards a depreciable asset, it should be adjusted with the cost of the asset. If the subsidy is of general nature, or if the subsidy is towards a non-depreciable asset, that is land, okay, majorly land, then it should be treated as income. Okay, it should be treated as income even if the subsidy is towards land, which is different from accounting standard. Accounting standard says if it is asset, whereas income tax law say if it is depreciable asset. Okay, right? So subsidy received as general contribution. Okay, any subsidy which is not towards a particular asset shall be treated as income. Okay, shall be treated as income. Similarly, if the subsidy is towards non-depreciable asset, if the subsidy is towards non-depreciable asset, then too it will be treated as income. If the subsidy is towards a non-depreciable asset also, if the subsidy is towards a non-depreciable asset, mainly we are speaking about land, then also it will be treated as income. Subsidy towards construction of building, any subsidy towards a depreciable asset will be okay, adjusted with the cost of the asset whenever it is received. Okay, okay. Compensation received for breach of contract. Okay, any business compensation other than for assets, any business compensation other than for assets will be an expenditure for the payer and okay, income for the receiver. Any business compensation will be an expenditure for the payer and for the receiver it will be treated as income. If the compensation is for the asset, which we will see in the next case, it should be adjusted with the cost of the asset. But I have something more to write here. Okay, there is a difference between penalty and compensation. Penalty is for violation of law, which is not allowed. I know I'm not speaking about expenditure here, but some words like this makes us to understand it better. penalty is for violation of law, which is not allowed, whereas compensation is for breach of contract terms, which is allowed. This is not, I am not paying it to a law. Okay, so it should be allowed. It should be allowed. I hope I have admitted all. So there is a difference, though this is to do with expenditure, but since I read the word compensation, I can take it as an opportunity to explain you. Okay, compensation received for failure to supply plant and machinery. Compensation received for, okay, since the compensation is directly relatable to an asset, it will be treated as, it will be adjusted with the cost of the asset. Okay, it will be adjusted with the cost of the asset. Non-compete fees, okay, will be treated as income. Will be treated as income under this head. Non-compete fees will be treated as income under this head, my dear friends. Export incentive, okay, these are duty drawback, sale of import license, cash support provided by government, okay, all export incentives shall be treated as, all export incentives shall be treated as income. All export incentives shall be treated as income. Okay. Payment received by a partner from the firm. Payment received by a partner from a firm. Okay. There are 4 types of payments maximum, but restricting it to 3 types. Okay, I'm not including drawings, so I'm restricting it to 3. Interest, remuneration, share of profit. Interest, remuneration. Interest and remuneration will be treated as income. Whatever is allowed in the hands of the firm. My dear friends, please understand, whatever is allowed in the hands of the firm will be treated as income. Suppose the interest paid comes to 1,50,000 in the hands of the firm, and in the hands of the firm 50,000 is disallowed because it is in excess of 12% limit. So only 1 lakh is allowed. Though actual interest paid is 1,50,000, but only 1 lakh is allowed in the hands of the firm. For the partner, please understand, for the partner, this 1 lakh will be treated as income. For the partner, only 1 lakh will be treated. Whatever is allowed in the hands of the firm will be treated as income in the hands of the partner. So, interest on capital, okay, and remuneration. Interest on capital and remuneration. Whatever is allowed as deduction in the hands of the firm will be treated as income in the hands of the partners, under this head. Okay, whatever is allowed as income in the hands of the firm will be whatever is allowed as deduction expenditure in the hands of the firm will be treated as income in the hands of the partner under PGBP. So it will be treated as income, okay, under PGBP. Okay, similarly, share of profit, okay, exempt in the hands of the partners under section 10 subsection 2. Okay, share of profit is not taxable. So interest on capital and remuneration, whatever is allowed in the hands of the firm will be treated as income in the hands of the partner. And most important, it is not that interest is taxable under IFOS, remuneration is taxable under salaries. Both are taxable under PGBP. As far as share of profit is concerned, exempt in the hands of the partners under section 10(2). Sale of asset used for scientific research or specified business. Okay. Okay. To understand, I am writing when these assets are acquired, they will be claimed as deduction. Okay, they will be claimed as an expenditure or deduction. When these assets are sold, sale proceeds will be deemed to be an business income under section 41. Okay, when these assets are subsequently sold, my dear friends, when these assets are subsequently sold, it will be treated as business income. I will provide one more value added answer. Keep it, let's not a questionable area, but still, where the sale proceeds exceeds original cost, okay, is more than the original cost. Such excess alone is taxable under capital gains. Such excess alone is taxable under capital gains, where the sale proceeds exceeds the original cost. Such excess is taxable under capital gains. Bad debts recovered, considered as income under section 41, provided it is earlier allowed as deduction. Bad debts recovered is considered as income under section 41 with a condition, with a stipulation, provided it is allowed earlier as income. Travel expenses incurred by company, principal company, for achieving target, okay, considered as income, for the receiver, considered as income for the receiver. Okay, this goes under the concept of perquisites are also treated as income for the beneficiary. Perquisites are also treated as income for the beneficiary. So this goes as income. GST refund, okay, shall be treated as income if it is already allowed as expenses. Okay, so like bad debts, if it is earlier allowed as deduction, when you get the refund, it is treated as income. Whereas income tax refund, we all know income tax is not allowed as deduction. We all know income tax is not allowed as deduction. Okay, IT refund will not be treated as income. Okay, as income tax is never treated as an allowable expenditure. Okay, so please understand, income tax refund will not be treated as income, as income tax is never treated as an allowable expenditure. But the important point, however, interest on IT refund will be treated as income under IFOS. Okay, however, interest on IT refund will be treated as income only, under which head? Income from other sources. We have already written this. Income, duty drawback, these are known as export incentive. Okay, so these will be treated as income. These are known as export incentives and these will be treated as income. Sale value of depreciable asset as well as non-depreciable asset. Okay, sale value of depreciable asset as well as non-depreciable asset. In case of depreciable asset, reduce the sale value from the block. Reduce the sale value from the block. In the case of depreciable asset, reduce the sale value even if they are given on the credit side. Sale of machinery, we should not consider it as business income. Okay, while doing PGBP computation, less non-business income, we will take out that sale of machinery because it is not an income at all. Reduce the sale value from the block. If the block cease to exist because of such a sale, then the surplus is short-term capital gains. Then the surplus will be treated as short term if because of this sale. Okay, so I had an opening WDV of 1,20,000. I purchased for 40,000, 1,60,000, less sale value 1,70,000. Reduce the sale value from the block if the block goes out of existence because of this sale. So it can only be surplus and it will be treated as short-term capital gain. It will be treated as short-term capital gain. In the case of non-depreciable asset, mainly land. Okay. Okay. Computation of gain will be done under capital gains chapter. Okay, I will take the indexed cost of acquisition if it is a long-term capital gain, cost of acquisition, and compute the gain. So it will be under long-term capital gain chapter. Conversion of asset into stock in trade is dealt with in CG chapter, capital gain. Conversion of stock into asset. What is this? Conversion of stock into asset. The fair market value on the date of conversion. What is that? The fair market value. The fair market value on the date of conversion will be treated as sale value of the stock. Please understand, the fair market value on the date of conversion will be treated as sale value of the stock. Okay? Okay? That is, if I sell the stock to an outsider, if I sell the stock to an outsider, what I will get, that is known as fair market value. So even though I consider in my books from stock, I'm considering it to stock, to capital asset, I will treat it as sale to an outsider. Sale to an outsider and realize my profit. Specify the classification of business and need for such classification. Specify the classification of business and need for such classification. Business is divided into three. Is mainly for set off of losses. Business is divided or classified into three. Why I am classifying is for losses. Speculation business. The loss arising therefrom can only be set off against income from speculation business. Okay, speculation business. Why I am classifying is the loss arising from speculation business can be set off only against income from speculation business. Specified business. Okay, mentioned in section 35 AD. Okay, the loss arising therefrom can only be set off against the income from specified business. Okay, again, specified business, the loss arising therefrom from the specified business can only be set off against income from specified business. Others, okay, which means other than speculation and specified, popularly known as general. Okay, general business. Okay, the general business. Loss can be set off against any income other than salaries in case of brought forward loss. The same can be set off against any income. The same can be set off against any income. Sorry, any business income. Sorry. Any business income. If I can go back and add something, okay, sorry for this. Okay, maximum period 4 years. Maximum period, okay, indefinite. Okay, maximum period, okay, 8 years. So these are all only can be income related. These things can only be income related, okay, which will appear on the credit side. Other than this, if anything is appearing on the credit side, it is not business income, we will reduce it. Less non-business income or income not falling under PGBP, we will reduce it. Okay, okay, friends, are you following? Okay, I am moving on. I am moving on. Okay, we are all one time looking at the format. Now I want to explain in the format something which generally first I make you understand, and then okay, here is what we should write it. I hope you are now clear about this. Okay, okay, okay. Now, format of claiming depreciation. Format of claiming depreciation. Quickly in our notebook. Format of claiming depreciation. Okay. Opening WDV as on 1st April, okay, probably 2019. For probably for all of you, it is 1st April 2019. Okay, right? Addition, addition. In our regular classroom, I would have said up to 30th September and from 1st October. Now I am making a small change, a very small change, but I want you to understand initially like that. Now please understand, in law terms, we call it as more than 180 days, less than 180 days. Okay, first half, second half, we call it as, okay, purchased and put to use for more than 180 days. Purchased and put to use for, okay, this the keywords which we write here is, okay, more than 180 days. Purchased and put to use for more than 180 days. Purchased and put to use for, okay, less than 180 days. Okay, that is the key thing which we use, purchased and put to use for more than 180 days. Okay, purchased and put to use for less than 180 days. Okay, so for all of us in the classroom, I do a reverse working. You just understand it, you need not write it. Okay, March will be 31 days. Feb will be this year 29 days, that is 1920 is a leap year. January will be 31 days. December will again be 31 days. November will be 30 days. Okay, 152, 152, and another 27 days in October. Another 27 days in October makes it 179. Makes it 179. Okay, right, friends? So please understand, for all of us in the classroom, to make it more clear, purchased and put to use, okay, on or before 4th October. exact date is 4th October. Okay, here exact date is on or after 5th October. Though they don't test it, but I want you to understand the exact date because law would have used the term more than 180 days, or actually this is, you need not strike off and write 180 days or more. Okay, so less than 180 days, exact 180 also falls in the first. So if it is a non-leap year, we call it as 3rd October. 3 extra days, which does not matter at all, don't worry. Okay, or less than 180 days, that is on or after 5th October if it is a non-leap. So this is a leap year. Okay, next. Deletions. Sale consideration of any asset falling in the block. Sale consideration of any asset falling in the block. Okay, that is a deletion. We have already seen subsidy received. Okay, okay. If it is not adjusted with cost of asset, adjusted here. Normally it should be adjusted here. Suppose last year's subsidy received now, you will adjust it separately. Rare case scenario, but I am just giving you that. Okay, right? You will get as balance available for depreciation. Balance available for depreciation. You will get it as balance available for depreciation less normal depreciation. Normal depreciation less normal depreciation, my dear friends. Okay, opening balance plus asset used for 180 days or more minus sale. Okay, this into full rate plus asset used for less than 180 days into half rate. Okay, this is my normal depreciation. Opening balance plus asset used for more than 180 days less sale into full rate plus asset used for less than 180 days into half rate. Additional depreciation. Okay, asset put to use for 180 days or more into 20% slash 35%. 35% is for that 4 states. Okay, notified areas of the state of Andhra Pradesh, Telangana, Bihar, and West Bengal. Okay, plus, okay, asset put to use for less than 180 days into 10 slash 17.5% into 10 slash 17.5%. Okay, all of us should understand that this is the core answer. This is the core answer, not just the WDV. Okay, this is the core answer. Closing WDV of the block as on 31st March 2020. as on 31st March 2020. Closing WDV as of 31st March 2020. Note, okay, 1. Okay, where only half of the eligible additional depreciation is claimed during the year, the other half can be claimed in the immediate succeeding year. Okay, the other half can be claimed in the next year, in the immediate succeeding year. In the immediate succeeding year. Note 2. If the manufacturing unit is located in the notified areas of the state of Bihar, West Bengal, uh, Andhra Pradesh and Telangana, okay, 32 AD investment allowance can be claimed, which is 15% of, okay, total additions made to plant and machinery used in manufacturing process. I hope it's visible. You are all following, right?
Yes, sir.
I have not seen this class so long silent. Okay. Ramji, irkiyada Raja? That's why silent. Huh? Okay. So, okay. But I can give you one guarantee that I'm not going to ask you any questions at all. Okay, I'm not going to ask you any questions at all. My intention is to not to test you in a revision session. My intention is to give you confidence. Okay, if at all you don't remember, try to remember when I work out. You will definitely remember whatever questions. So this 2 days dedicated to revision. So whatever questions I give it as homework, please sincerely do it after the session is over, so that before the next session, whatever doubt we have, we can recollect and recoup it. Okay, I am not at all going to ask you any questions. Okay, I am going to be very clear. My intention is, ஒருவேளை நான் question கேட்டு, if you are unable to recollect, I am not saying you are not prepared. If you are unable to recollect, then you will have this small fear psychosis entering. I don't want that. After all, it's our passionate tax. So I will always say that I will do the solutions also. Wherever you have a doubt, you can stop me. Wherever you have a doubt, you can stop me, my dear friends. And I hope you are not chatting in the chat box to me. Please, I cannot see the chat box. Okay, so my request will always be to send it me through WhatsApp so that I can check it and give you the solutions. Okay, let's move on. Okay, friends. Understanding depreciation. The opening WDV of plant and machinery block, which is 15%, 30 lakh 40,000. New machinery, 16th August. If they have not given the date of putting it into use separately, if they have not given that, if they have not given a date of putting it into use separately, then don't worry, it is on the same date of purchase. It is majority or plug and play, so no problem, it will be on the same date. New machinery 1410, and on 11th November 2645. Old machinery having a book value of 5 lakh is sold for I want only this value. I will not take that value in the books. Okay, always sale value. Compute eligible depreciation if it is a trading entity. If it is a trading entity, we will not be having additional depreciation. So, my dear friends, you can also do, I will also do, you can verify, or along with me, you can do any option. I am open to you. Any option, I am open to you. Okay. Somebody let me know whether this is right, whether my calculation is right. I'm getting 7,89,825. Nothing but 6588 minus 2645. 6588 minus 2645 into 15%. Okay, nothing but, my dear friends, okay, 65 lakh 88,000 minus 26 lakh 45,000 into 15% plus 26 lakh 45,000 into 7.5% into 7.5%. Hope my answer is correct. Okay. Hope, okay. I believe that the answer is correct. So if it is the trading entity, if it is a trading entity, this is the depreciation. If it is a trading entity, my dear friends, additional depreciation will not come. Okay. Trading entity, this will be the depreciation. Okay, this will be the depreciation. Now the part B of the question. Now the part B of the question, which talks about manufacturing. Now the part B of the question, which talks about manufacturing. Which talks about manufacturing. Normal, additional. Normal, additional. Normal depreciation is as computed already. Normal depreciation is as computed already. That is, okay, 65 lakh 88,000 minus 26 lakh 45,000 into 15% plus for this 26 lakh 48%, 7.5%. Already we have computed 7 lakh 89,825. 7 lakh 89,825. Additional depreciation 14 lakh 10,000 into 20% plus 26 lakh 45,000 into 10%. Okay, into 10%. Repeating, additional depreciation is for additions made. So 14 lakh 10,000. Okay, sorry, additions made. So 14 lakh 10,000. For full year, I can claim 20%. For the second half purchase, less than 180 days, 26 lakh 45,000 into 10%. Into 10%. Okay. This is the total depreciation, which is the main answer. Closing WDV. Closing WDV 52, 51, 675. Note, note, okay, that for the asset purchased in November, only 10% of additional depreciation is claimed. Correct? Only 10% is claimed. The balance 10% can be claimed in financial year 2021. The balance 10% can be claimed in the financial year 2021. Okay. So this is in the case of manufacturing. What will your answer change if it is not a manufacturing company but a firm involved in manufacturing? Okay. The benefit of additional depreciation is available for all manufacturing entities. So even sole proprietor, firm, company, everyone can claim. So our answer will not change. So our answer will not change. Everyone can claim. Our answer will not undergo a change. Okay. Going to the next question. The opening WDV of plant and machinery block is 7442 and the block of car is 3512. Here my intention is to focus on the new rate of depreciation of car and also to check on once more to check on this manufacturing so that we are clear. The following assets are purchased during the year. New plant 2415 in July, 3205 in January. On analysis, in the last year Jan, you have purchased the machine for 35 lakh 10,000. This information is given because last year you would have only claimed 10% additional depreciation for this. Last year you would have only claimed 10% additional depreciation for this. This year you should claim for the 10%. That's why they have given this information. That is why this information is given. 3 new cars, one purchased in July for 11 lakh 10,000. The rate is only 15% because it is before 23rd August 2019. The second is purchased in September for 8 lakh 90,000. Interestingly, here the rate becomes 30%. It is purchased in September, so the rate is 30%. Third purchased in January, interestingly, half of 30%, 15%. Repeating, this is the thing I want you to understand. Here, 11 lakh 10,000 will get full 15% because rate has not changed. This is purchased in July. Second, purchased in September. Purchased in September, 30% rate of changed. Third, purchased in January, half of the eligible rate. Eligible rate has become 30%. So half of it will become 15%. Furniture purchased for factory, for furniture normal rate 10%. So since it is December, you can only claim 5%. You can only claim 5%. And remember, furniture is not eligible for additional depreciation. Only plant and machinery and computers which are used for manufacturing. So very rare. So you can understand it as plant and machinery only. Compute if it is a trading, if it is a manufacturing, if it is manufacturing in the notified area. We will do it in two parts, plant and machinery separately, car and furniture separately, because car and furniture will not change for B and C. Okay, only plant and machinery will change. Car and furniture is regular. So I am starting with car and furniture. Okay. Both are nil. Okay. Car is 35 lakh 12,000. Furniture is nil. Okay. Here it is 1110 plus 890. 11 lakh 10,000 plus 8 lakh 90,000. 11 lakh 10,000 plus 8 lakh 90,000. Less than 180 days, 12 lakh 10,000, 12 lakh 10,000, 1 lakh 11,000. Less than 180 days, 12 lakh 10,000, 1 lakh 11,000. Deletions. Okay, there is no deletions as such. There is no deletion as such. Balance available for depreciation. Balance available for depreciation. Okay, less depreciation. Okay, I'm going little detailed for car so that we are clear. I'm going little detail. Okay, for opening balance and asset purchase, car purchased before 23rd August. 15%. So what happens? Okay, for opening balance of 35 lakh 12,000 plus car purchased in July 11 lakh 10,000. Okay, into 15%. Into 15% for opening balance and the car purchased on 20 before 23rd August, July, it is 15%. For car purchased in September into 30%. Okay, that is 8,90,000 into 30%. 8,90,000 into 30%. Okay, for car purchased in okay Jan into 15%, half of 30%, half of 30%. So 12 lakh 10,000, 12 lakh 10,000 into 30, 15%, into 15% for car purchased in Jan. Okay, 12. Okay, it is 12 lakh 10,000 into 15%. Half of the eligible rate become 30% for furniture. Okay, at 5%, half of 10%, because it is purchased in the second half, it is directly into 5%. Okay, into 5%. So closing WDV any doubts ask me. Any doubts ask me. Enna Abayas, are you following it?
Yes, sir. Yes, sir.
11 lakh 47,350. Nothing but repeating. For car opening balance and purchased up to 22nd August, I will claim 15% because that is the eligible rate. On 23rd August, the finance minister announced any motor vehicle purchased from this date till the year end, the rate changes. So for September purchased vehicle, I claim the full depreciation, which is 30%, which is 30%. For the less than 180 days, I claim that is 12 lakh 10,000 into this 12 lakh 10,000 into half of the eligible new rate, because the new rate becomes the eligible rate, so 15%. Okay, for plant and machinery, keep doing. I'm also joining you. Keep doing for a trading entity, plant and machinery. Okay, opening WDV, it is going to be, okay, 74 lakh 42,000, 74 42,000. Asset purchase put use for 180 days or more, 24 lakh 15,000. 24 lakh 15,000. Put to use for less than 182 days, 32 lakh 5,000. 32 lakh 5,000. There is no sale consideration as such. There is no sale consideration as such. So we are getting a depreciation of 17 lakh 18,925. Please check it out. 17 lakh 18,925. That is 1 crore 30 lakh 62,000 minus 32 lakh 5,000 into 15%, and 32 lakh 5,000 into 7.5%, into 7.5%, somewhere in the range of 98 lakhs and dot into 15%, 32 lakhs and dot into 7.5%. And if it is a manufacturing concern, not located in a notified area. Okay, if it is a manufacturing concern not located in the notified area, okay, if it is a manufacturing concern not located in the notified area, keep doing. I'm also going to give you the answer. Our normal depreciation will remain the same. Our normal depreciation will remain the same, 17, 18, 925. Our additional depreciation will be 24 lakh 15,000. 24 lakh, our additional depreciation. I'm working out that. I request you to look into this. 24 lakh 15,000 into 20% plus 32 lakh 5,000 into 10% plus, please understand, last year I had purchased an asset in the second half, 35 lakh 10,000. Last year I have purchased an asset in the second half, 35 lakh 10,000. For last year, I would have only claimed 10%. Another 10% I am claiming it now. Another 10% I am claiming it now, making it 28. The total depreciation as 2873 425. 28 73 425. Part C, manufacturing in a notified of specified state. Part C, manufacturing in a notified area of a specified state. Okay, of a specified state, my dear friends. Keep working. Okay, so the additional depreciation will be 35% and 17.5%. This apart, 32 AD investment allowance, okay, total asset purchase value. Here you need not do anything, any subdivision as 180 more than 180, okay, into 15%. That is 24 lakh 15,000 plus 32 lakh 5,000 into 15%. Okay, this is a direct given benefit given. Okay, that is close to 56 lakh 20 per thousand into 15%. Okay, remember, okay, 32 AD need not be reduced from the block. Okay, you are the last exam to write 32 AD. So rare only this question is, but on the safer side, I thought I can work out and show you. Are you following what does it? Are you following this?
Yes, sir.
So the total depreciation, you all know, we have worked out car and furniture separately. If you add it up everywhere, you will get the total depreciation. Only plant and machinery keeps changing, trading, manufacturing in a specified unit, etc. Okay, otherwise it is not an issue. Okay, question number 3. When does a block ceases to exist? Okay, and what are all its consequences? Okay, question number 3. Okay, question number 3. When does a block ceases to exist? A block goes out of existence. Okay, that is cease to exist. Okay, if okay, all the assets in the block are sold, and second case is if the sale consideration exceeds the balance available in the block. These are all the two circumstances. The block goes out of existence if all the assets are sold, or if the sale consideration exceeds the opening balance plus additions. Okay, sale consideration exceeds the balance available. Okay, um, the result will either be short-term capital gain or STCL, short-term capital loss. So it will not even come to this chapter. It goes to the next chapter. It goes to the next chapter, short-term capital gain or short-term capital loss. Siana and Rania, carrying on business as a firm, had opening WDV of building 70 lakhs, plant and machinery 40 lakh 40,000. They converted the firm into a company on and from 1st December 2019. Compute the depreciation the firm and the company can claim. Okay, concept of proportionate depreciation. Concept of proportionate depreciation. Amalgamation, demerger, conversion. Okay, in these events, this concept arises. So this concept arises if there is an amalgamation, demerger or conversion. Okay, two entities claiming depreciation for the same asset. Two entities claiming depreciation for what? For the same asset. For the same asset, two entities claiming depreciation. Okay, depreciation will first be computed and distributed to both entities on proportionate basis. Depreciation will first be computed. I will first compute the depreciation and distribute it on proportionate basis, that is on the basis of usage, effective usage. On the basis of effective usage, I will distribute it. So this will arise in the case of amalgamation, demerger, conversion. Two entities claiming depreciation for the same asset. So what I will do, I will first compute the depreciation and distribute it between in this given case, the firm and the company. Let us now, okay, for the given question, let us compute. Okay, 10% on building. So on 10% on building, 70 lakhs into 10%, 15% on plant and machinery. 15% on plant and machinery. 40 lakh 40,000 into 15%. So the total depreciation is, okay, the total depreciation is 1306,000. The total depreciation is 1306. Depreciation will first be computed. We have computed the depreciation as 1306,000. And now we need to distribute it on proportionate basis. Okay. Now, for the company December to March, how many days? 31 December, 31 January, 29 Feb, 31 March. So what happens? Okay, 31 plus 31 plus 29 plus 31, 122 days. 122 days, repeating, for the company. 1st December onwards, the company is using December 31 days, January 31 days, Feb leap year 29 days, and March 31 days. For the firm, it's simple. 366 days minus 122 days. Okay, since it's a leap year, 366 minus 122. Shall we now claim and see? Okay, okay, for the firm, for the company, okay, into 122 divided by 366. Okay, this is what the company can claim, and this is what the firm can claim. Always on the basis of number of days. Always, okay, on the basis of number of days. Okay, number of days you should split. So I will compute the depreciation for the company, whichever is easier. Shorter days, take that, and the other one is a higher number of days. So over our depreciation, one more question, unabsorbed depreciation. Okay. The WDV of 15% block on 1st April. It purchased on June 2019. Put to use. This is only the relevant date, not the date of usage. Okay. And on December, put to use. For the asset purchased in June, the entity received a subsidy of 1 lakh from government. So you should not take 6 lakh 10, you should take 5 lakh 10. You should take 5 lakh 10 out of the assets purchased in December, that is this 14 lakh 60,000. 40,000 was paid on a single day by cash, not allowed. If you pay by cash, cross the check or barrel check, I will not include it in the cost of the asset. So I will reduce. It purchased in 1819. Okay, it purchased the machine worth 1740, put to use only in December 2018. In the last year, it's a manufacturing entity. So in the last year, only 10% would have been claimed. We should claim the other 10%. So this is a homework question. This is a homework question for you. Okay, please, whenever after today's session, whenever you find time, you should work it out and let me know the answer. Okay, question number 5 is a homework question. Okay, question number 6. Write short notes on treatment of unabsorbed depreciation. Okay. Question number 6. Okay. Unabsorbed depreciation. Okay. Where the profit before charging depreciation is not sufficient to cover the whole of the depreciation, where the profit before charging depreciation is not sufficient to cover the whole of the depreciation. The uncovered portion is known as unabsorbed depreciation. The uncovered portion is known as unabsorbed depreciation, where the profit before charging depreciation is not sufficient to cover the whole of the depreciation. The uncovered portion of depreciation is known as unabsorbed depreciation. The uncovered portion is known as unabsorbed depreciation. Okay, right? Unabsorbed depreciation can be set off against any income. It can be carried forward for indefinite period. It can be carried forward for multiple years. It can be set off against any income, and remember this point also, it can be carried forward even if a return of income is filed late. Normally, we should file the return of income within due date to enjoy the carry forward benefit. To enjoy the carry forward benefit, normally return of income should be filed within due date. But in this case, in the case of unabsorbed depreciation, it can be carried forward even if a return of income is filed belated. Even if the return of income is filed belated. So we have seen depreciation, normal, additional, unabsorbed, proportionate, and investment allowance. A look through of these and doing the homework will give you confidence. Whenever you want to work out, just check. Okay, never have the feeling that you don't understand. Only have the feeling that I need to understand more. Look into the workings. It is not difficult, and anyhow I'm available if you have any clarifications to be made. Okay, so we have completed 32, 30 and 31 are just relating to building, relating to plant and machinery. 32 depreciation, 33 is not in our syllabus. Now moving on to 35. Moving on to 35. Okay, and in that I will first go to the theory to just check what it is. Okay, first let us go to the theory. 35 AD specified business. 35 AD specified business should be a new business. There are two conditions. There are two conditions for new business. One, it should not be a split off of an already existing business. It should not be a split off of an already existing business. It should not be a demerged unit, or in the whole of plant and machinery block. Let us take 1 crore of plant and machinery is there. At least 80 lakhs should be new machinery. 20 lakhs can be second hand. 80 lakhs should be new machinery. Okay, only 20% can be old, otherwise it should be new plant and machinery. Otherwise it should be new plant and machinery. Okay, 100% of capital and revenue expenses will be allowed as deduction. The whole of the capital and revenue expenses will be allowed as deduction. Even the past period can be accumulated. Even if it is incurred before, it can be accumulated and claimed. Only three things cannot be claimed: cost of land, goodwill, and investments in share securities cannot be claimed. Okay. And we all know, we have written, loss from specified business cannot be set off against any other thing other than income from specified business. Keeping this in our mind, we are approaching a practical question. We are approaching a practical question. One ground rule, both not only here, everywhere. If asset is claimed as deduction, then depreciation should not be allowed. Class, listen. If asset is claimed as deduction, depreciation should not be allowed. Raja Bhoga Yoga Limited commenced a hospital with 200 patient beds in Kanchipuram, which qualifies under Section 35 AD. The company gives you the following particulars: compute their taxable income, expenditure, cost of construction, equipment purchased, amount paid to a doctor recorded as goodwill, so not allowed, other expenses, expenditure of the current year, construction cost, equipment purchased 14 lakhs, 2 lakhs was paid in cash on a single day, which will not be allowed, which will not be allowed. Furniture fixtures 7 lakhs, donation of 2 lakhs was received. So this should be adjusted. Any subsidy received against an asset, it should be adjusted. Okay. Revenue details: income earned, expenses incurred. Out of this, 1510 is not allowed. Depreciation as per books. Okay. A good comprehensive question to check. A good comprehensive question to check. I'm working, you are following. I'm working, you are following. Na Ramji, tungi petiya?
Sir?
Tungi petiya na badavanne.
Yes, sir. Night கொஞ்சம் லேட்டா படுத்துட்டேங்க sir.
Oh. Computation of eligible deduction under section 35 AD. Computation of eligible deduction under section 35 AD. ராம்ஜி ரொம்ப நிர்மலா சீதாராமனோட உனக்கு நிறைய ஜிஎஸ்டி தெரியுமாமே. Computation of eligible deduction under section 35 AD. Expenses incurred in 1819, that is the past year. Okay, even the past year can be brought forward and claimed. Okay. Construction cost of building, six lakhs. Construction cost of building 66 lakhs. Equipment, purchased 11 lakhs. Goodwill not allowed as deduction, not a qualifying asset. Goodwill will not be allowed as deduction. Other expenses 8 lakhs. Expenses incurred in 1920. Expenses incurred in 1920. Construction cost 33 lakhs. Equipment purchased minus amount paid otherwise than by account payee check, draft or banking channels in. Okay, so okay, in excess of rupees 10,000 on a single day, similar to 40A subsection 3. Similar to 40A subsection 3. So, out of 14 lakhs, I will not allow 2 lakhs because you have paid it in cash. Out of 14 lakhs, I will not allow 2 lakhs because you have paid it in cash. Furniture and fixtures less furnitures and fixtures less subsidy received. Subsidy need not be from government. Any external party funding it is known as subsidy. You are not paying for it. Some other person is paying for it. It is known as subsidy. Total expenditure to be claimed under 35 AD, total expenditure to be claimed under 35 AD. Okay, 21 crore 64 lakhs. Income earned 21 crore 64 lakhs. Okay, regular expenses. Okay, what happens is 17 crore 10 lakhs. Okay, disallowed expenses due to cash payment or and TDS default, etc. 15 lakh 10,000. So the actual expenses allowed is 16 crore 94 lakh 90,000. The actual expenses allowed is this: profit before claiming 35 AD, profit before claiming 35 AD is 4 crore 69 lakh 10,000. Okay, expenditure under section 35 AD, expenditure under section 35 AD 1 crore 35 lakh, profit from specified business, profit from specified business, okay, is 3 crore 34 lakh 10,000. 3 crore 10 with a, okay. Note, depreciation cannot be claimed as asset itself is claimed as deduction. Okay, okay. So since assets itself is claimed as deduction, Depreciation cannot be claimed. So this is the profit of specified business, or this is the way specified business has to be approached. This is the way specified business has to be approached. It will be a simple question. You need not remember what are all specified business. They will either give you the section number or they will use the word specified business. So you need not remember at all. Do not worry. Now coming to section 35. Coming to section 35, scientific research. Let's understand. Okay, it is divided into three. It is divided into three. Okay, I'll take a coffee break and come back. Okay, yes, thanks. So, with regard to scientific research, we divide it into three. Okay, if it is a manufacturing company, I want you to understand only for companies, not for a manufacturing firm, not like additional depreciation, which is available for all manufacturing entities. Here I am restricting to companies. 150% of the expenditure is allowed, but only 100% for building. Non-manufacturing companies, which means trading companies, sole proprietor, firm, everything, 100% is allowed. In both the cases, not only here in 35 AD, skill development, everywhere, whole of income tax you can take, no deduction for land in all the places. And past 3 years expenditure can be accumulated. Be it manufacturing or non-manufacturing, it's only 100%. It's only 100% that can be claimed if it is past expenditure. Contribution to an external agency depends upon whether is it for scientific research or whether is it for social and statistical research. If it is for scientific research, normally 150%. If it is for social research, normally 100%. Class, listen. If it is for scientific research, normally 150%. Social and statistical research, normally 100%. But even if it is for scientific research, if I give contribution to another company, if I don't give contribution to national lab, contribution to IIT, contribution to research institution, 150%. Contribution to X Limited, the X Limited's main object is research. Here it is not 100%, it is not 150%, it is 100%. It is only 100%. And the next part of 35 is to do with preliminary expenses will be allowed in 5 equal installments. Similarly, amalgamation, demerger, VRS compensation, all 5 equal installment. Okay, but these are not part of our syllabus, so preliminary expenses. Contribution to project approved by national committee, okay, allowed. Spending on agricultural extension program, 150% allowed, no cost of land. Skill development again, only for manufacturing companies. Only for manufacturing company, 150% allowed.
Sir, I have a doubt, sir.
Go ahead with your doubt. For the first time in 2 hours, I'm having a doubt. Yeah, go ahead.
Sir, under scientific research to contribution to all Indian companies, is it not limited to only public limited companies?
This is what you're asking, up 100%?
Yes, sir.
Yes, it is limited to public. It's only for public limited companies. You're right.
Okay.
Sir?
Raja,
Sir?
ஏடா ராஜா அடம் பிடிக்கிறான்.
Sir, there is subdivision in scientific research, sir, which is related to his business or not related to his business, sir.
Raja, the contribution 150%. Don't worry about related or non-related. The old provision and the related, non-related.
Okay, sir.
Friends, question number 8. Specify whether the following can be claimed as deduction. Purchase of land for nature, manufacturing, non-manufacturing. Okay, it can be a trading company, or it can be even, I can write, it can be a trading company, it can be a firm, it can be a sole proprietary organization. It is going to be the same. Not allowed, not allowed, my dear friends. Okay, construction of research lab, 100% can be claimed even asset is not put to use. Here also 100% can be claimed even if asset. So for building, in both the cases only 100%. In both the cases for building only 100%. Purchase of research equipment. Purchase of research equipment, 150% of expenditure will be allowed, whereas here only 100% of expenses will be allowed. Okay. Depreciation not allowed. Okay. General rule, if asset is claimed as deduction, depreciation will not be allowed. That is a general rule. Okay, it is a general rule that if asset itself is claimed as deduction, you cannot claim the depreciation. It's a general rule. Okay, right? Purchase of research material, 150% will be allowed. Here only 100% will be allowed. Okay, contribution to IIT for social science research. Here the highlighting word is social science. Okay, 100% will be allowed. Okay, here also 100%. With regard to contribution, there is no difference. With regard to contribution, there is no difference. With regard to contribution, no difference. Contribution to national lab for scientific research. Contribution to national lab for scientific research, my dear friends. Here it is scientific. So 150% of amount contributed will be allowed, be it anyone. Okay, be it manufacturing or non-manufacturing, it is the same. As far as contribution is concerned, no difference. Expenditure of voluntary retirement of employees, whatever it is, 1/5 will be allowed for 5 years. Okay, in 5 equal installments will be allowed. Retrenchment compensation fully allowed. Only voluntary contribution needs to have a provision of, okay, that's not there in your syllabus, but generally only VRS has the provision of deferring it in 5 equal installment, whereas retrenchment fully allowed. Difference between redemption value and issue price of 0 coupon bonds, again not part of your syllabus, will be allowed over the period of bond. Preliminary expenses, again 1/5 allowed. Preliminary expenses is the only amortization you have. Okay. 36 is full of whatever is allowed. 36 is full of whatever is allowed, and 37 is 5 condition. Okay, let's quickly complete the theory once. Okay, 36 insurance premium for stock allowed including livestock, for employees allowed, for assets it is already covered under 3031. Bonus and commission allowed provided it is paid within due date. Interest is allowed provided the borrowing is used for the purpose of business. Okay. Employer contribution is allowed. Pension fund, it is allowed to the extent of 10%. Okay. Employer contribution. Employee contribution is allowed provided it is paid within the due date. Bad debts allowed. Promotion of family planning expenditure. We need to understand that it is only for companies. It is only for companies. Revenue expenditure is fully allowed. Capital expenditure is allowed in 5 equal installment. Now, company is not forming part of our syllabus, but this can be a what I would call it as an MCQ question. Okay, STT, CTT are allowed. Okay, provided I failed to write, but somewhere make a marking. Provided the securities or commodities are held as stock. Provided the securities or commodities are held as stock. Provided the securities or commodities are held as stock. Section 37 is full of conditions. Those expenses which are not covered from 30 to 36, which are not of capital nature, not of personal nature, incurred during the previous year for the purpose of business or profession is allowed. Repeating, expenses not covered under 30 to 36, because 30 to 36 we know what is allowed, which is not, because depreciation is not in 37. Scientific research is not in 37, though it is capital expenditure. Sir, you say here it is capital expenditure not allowed, because whatever is not covered under 30 to 36, only I am speaking here. Expenses not covered under 30 to 36, not of capital nature, not of personal nature, incurred during the previous year for the purpose of business or profession is allowed. What are all not allowed? Donations not allowed, CSR benefits not allowed, okay? And similarly, penalties on offences under any law. I told you, penalty for breach of contract between two parties allowed. For breach of law, not allowed. Bribes, secret commissions, penalties under various laws are not allowed. Remember, interest under other laws are allowed. Penalty paid for breach of contract is allowed. Because it is not breach of law, it is breach of contract. Okay. Okay, friends. I hope this is clear to you. I hope this is clear to you. Okay. Now disallowance provision. Now disallowance 30 to 37 allowed. 28 we have seen, 41 we have seen, 29 is computation. Don't worry. Okay. Disallowance provision. First and foremost, TDS. Whatever I discussed at the beginning of the class. Okay, TDS. There are two obligations which I have with regard to TDS. As a payer, I have two obligations. Deduct tax in the same year in which expenses are incurred. That is 1920. For us, 1920. Expenses incurred in 1920, I should deduct tax in 1920 and remit it into the government account and pay it into the government account before due date of filing return, 31st July or 30th September, as the case may be. Where there is a default, what are all the default? Either I have not deducted or not remitted. 30% disallowed if the payment is to a resident, 100% disallowed if the payment is to a non-resident. And whatever is rectified, whenever it is rectified, whatever is disallowed is allowed. Okay, that's whatever I told you in the beginning of the class. So TDS default means either tax is not deducted or not remitted within due date of filing return. 100% will be disallowed if it is NR and 30%. Allow the disallowed amount in the year the default is rectified. Okay, allow even if the receiver submits proof. I told you Vathson and Sai Lakshmi example. Okay, go back and look into it. Okay, allow it only in the year in which it is rectified. Remember, if the question has default rectification of past year, then during financial year 1920. That is 17-18 or 18-19, I did not remit or I did not deduct. In that year, I would have only disallowed 30%. Ensure to allow 30% or 100%, which would have been disallowed in that year. Okay, what I am asking you to remember, current year expenditure, you will disallow 30%. Last year, TDS default rectified during the current year. Repeating, last year TDS default rectified during 1920. So last year I would have claimed 70%. Only 30% would have been disallowed. That 30% should only be allowed now. If it is non-resident, 100%. Income tax, provision for income tax, advance tax, any cess, fees, interest, etc. will be disallowed. Payment to relative in excess of fair market value will be disallowed. In excess of fair market value will be disallowed. Payment in excess of rupees 10,000. Payment in excess of rupees 10,000 on a single day to a particular person. If you are making a payment in excess of 10,000, pay it by account payee check, bank transfer, or any of the electronic pay, Google Pay, UPI, okay, Rupee, okay, debit card, credit card, anything on a single day. Okay, 1 minute. Account payee check, draft electronic systems, etc. One minute, friends. இதெல்லாம் approved இப்போ. All these are approved. You need not remember everything. Credit card, debit card, net banking, immediate payment services, UPI, RTGS, NEFT, BMAP. Okay, all these things are approved now. Okay, so these are all the methods in which you can pay. So what I have done is, in what method you should not pay. In what method you should not pay. You should not pay by cash, cross check, or barrel check. If you pay not the excess, whole of the expenditure is disallowed. Exceptions are agriculturist, fishermen, employees outside the base location, emergency payment on bank holiday, any settlement due to death, and for transport operator limit is 35,000. Contingency provision, transfer to reserve, payment to unrecognized funds are disallowed. My dear friends. So, friend, Samyukta, a popular singer, computes her profit from her profession as rupees 21,40,000 after debiting the following items. She approaches you for computation of her income as well as tax. I'm going to include lot of things. We will study randomly. I'm only going to do. I will explain and do it. But we are not going to concise. We are not going to be horses to say only this. We will do completely. Payment made to accompanist without deducting tax at source 1,75,000. She rectified the error only in June 2020. Payment made to a non-resident for arranging concerts outside India, rupees 15,000. She is of the opinion that such payment is within threshold limit of 194J. 194J is only for residents. For non-resident, right from rupee 1, you have to reduce. Though it is, you will study it in final, but generally I am saying, so that is 100% disallowance. She paid an amount of 75,000 after deducting due taxes to an accompanist who happens to be her cousin brother, also my fan. Okay. On a general scale, it is understood that she pays only rupees 51,000 to such accompanists if they are not related. So payment to a relative. She purchased musical equipments, instruments eligible for a depreciation of 15%, 1,24,000 in Jan 2020. The whole amount is debited to P&L. Donation to the school where she studied, we all know, 40,000 but donated in cash will not qualify. Okay. She paid in cash on 14th June, rupees 16,000 will not qualify. 17th July, 9,000 no disallowance. 18th November, 17,000 due to bank holiday allowed, and 17th December 32,000 for bills raised in the different dates. On a single day you have paid. So the 16,000, 32,000 disallowed. The 16,000, 32,000 disallowed. 9,000 and 17,000 allowed. Income tax provided 174. Other information not considered in arriving at the above profit. During the year 1819, she paid accompanies without deducting tax rupees 150. The tax was deducted and paid in the current year July. So last year I would have only disallowed 30%. Last year I would have only disallowed 30%. That 30% should be allowed during the current year. Samyukta has invested in NSC and other notified 80C. Okay. Samyukta has purchased a house for the first time in the financial year 1920. The stamp value of the house is 43 lakh. She has taken a loan for 40 lakhs from SBI for purchase of the house. The interest rate is 9%. Whole loan is outstanding. I am talking about a new section which is introduced in 1920, 80 EEA. Section 80 EEA. Okay. Section 80 EEA. That particular section says that is, it should be a new, it's a very good section, questionable area. Okay. Assessee is an individual, so qualifies. Loan is taken for acquisition of residential property, qualifies. Loan is taken during this year, qualify. The stamp value of the property does not exceed 45 lakhs. Up to 45 also allowed. 45 lakh, 1 onwards, not allowed. Okay. This should be the first property and it should be self-occupied, qualifies. Quantum of deduction, whatever you are eligible to claim in section 24. That is house property chapter, 2 lakhs you are eligible to claim. Over and above 2 lakhs, however it is, how much ever it is there, or 150, whichever is less. or rupees 1,50,000, whichever is less, that is what she can claim.
Sir, can you please repeat it once again, sir?
Yeah, I can repeat it. I will repeat it. Do not worry. This section I will work out in at least 4-5 questions so that we are spot on clear, spot on understanding this. Okay. Okay. Now I'm going to work out and show you how to compute 80 EEA. First, I am going to work out section 80 EEA. Okay, friends. Computation of interest on housing loan. Okay, computation of interest on housing loan. Understand, value of HP, stamp value of the HP, okay, is 43 lakhs. So condition fulfilled. Value of loan 40 lakhs. Okay, rate of interest, my dear friends, 9%. Okay, rate of interest 9%. Okay, interest from the date of borrowing is 1st May. Okay, the data, okay, interest for 11 months. Interest for 11 months. Please understand, 40 lakhs into 9% into 11 by 12. 40 lakhs into 9% into 11 by 12, 3,30,000, 3,30,000. I want the class to understand, okay, interest that can be claimed under house property, income from house property, section 24, self-occupied. So, my interest is restricted to 2 lakhs. For a self-occupied property, interest up to 2 lakhs can only be claimed under section 24 house property chapter. House property chapter, this can only be claimed. Okay, interest claimed under section 80 EEA, interest claimed under section 80 EEA. Please understand, interest exceeding rupees 2 lakhs. Why? Because 2 lakhs I have already claimed under IHP chapter. 2 lakhs I have already claimed under IHP chapter. So interest exceeding 2 lakhs is 1,30,000. Maximum claimable 1,50,000. Whichever is less, so I can claim only amongst the two, whichever is less, 1,30,000.
Sir,
Listening?
so this is apart from the 2 lakhs which we claim in house property chapter.
Yeah,
Okay, sir.
correct. That is 2 lakhs you can claim in house property till last year, 1819. That's all. The remaining 130 is lost permanently. But from this year, there is one section which gives me relief, provided other conditions are fulfilled. What other condition? Stamp value of the property not to exceed 45 lakhs. Okay, house property should be first one and it should be self-occupied, all these conditions.
Sir,
Listening, Ovia? Or
sir, but there is a condition that loan amount should not exceed 30 lakhs, right?
Adu vandu 80EE. We will see that section later.
Okay, sir.
Computation of income from profession. Computation of income from profession. Okay. Net profit as per P&L account. She has already computed the P&L account. The net profit 21,40,000. 21,40,000. And okay, 30% of expenditure on which tax is not deducted. This will be allowed in 2021 as the default is rectified. So how much is that? 1,75,000 into 30%. 1,75,000 into 30%. Okay. 100% of expenditure on which made to NR on which tax is not deducted. Okay. NR does not have threshold limit. 15,000. 15,000. 15,000. Okay. She has paid an amount of 75,000 to an okay. Payment to a relative in excess of FMV. Okay. 75,000 minus 51,000. Purchase of musical equipment. Only depreciation can be claimed as it is a capital expenditure. Okay, 1,24,000. Okay, okay. Donation to school. APG cannot be claimed as donation is made in cash. 40,000. 48.3, that is cash payment for in excess of 10,000. 48.3 violation. Okay. Payment in June and December are violation because exceeds rupees 10,000 on a single day to a particular person. So what is disallowed is 16 plus 32. 16,000 plus 32,000 on a single day to a particular person. It exceeds, so there is a disallowance. 48.3 violation, but still allowed as exceptions protect them. Okay, payment on a bank holiday and payment less than threshold limit.
Sir, I have a doubt.
Go ahead.
Sir, for the first expenditure, the tax has been paid by June. So, if it's before filing of returns, should you allow it?
Is not deducted. That is the problem here. Without deducting tax, and she has deducted and paid in June. You should have deducted in March, and if you have paid it in June, no problem. But if you have not at all deducted before the year end, it is this 30% disallowed.
Okay, sir.
15% depreciation. Okay, 7.5%. 7.5% depreciation on musical instrument put to use for less than 180 days. How much is the music? 1,24,000 into 7.5%.
Sir,
Listening?
sir, if the whole asset is claimed as deduction, then depreciation cannot be claimed.
Yeah, I have added back. It cannot be claimed. It's not scientific research. It's not specified business. So I have added it back and claiming depreciation.
Oh, so any asset we cannot, like, if we claim it as a deduction, we cannot
Not at all.
the depreciation.
Everybody will claim asset as deduction. Only scientific research, specified business you can.
Okay. Yes.
Sir, the depreciation rate will be given in exams, or should we remember at least like
remember the popular rates, plant and machinery, musical instrument, everything plant and machinery, 15%, furniture 10%, car 15%, computer. Otherwise, they will give you. They will give you. Don't worry.
Okay.
During the year 1819, she has paid 1,50,000 to her. Okay, on which tax? Okay, 30% of expenditure on which tax was not deducted in 1819, but default is rectified in 1920. Default is rectified in 1920. Okay, 1,50,000 into 30%. Okay. Income from profession. Computation of total income. Computation of total income. House property. Okay, which is, we all know, self-occupied. Okay, NAV nil. Okay, interest on borrowed capital restricted to 2 lakhs. So there is a Loss of 2 lakhs from house property. Business or profession. Income as computed. We have already computed the income and kept it ready. There is no other income. Gross total income. Gross total income is this. Deduction under chapter 6A. Deduction under chapter 6A. Deduction under chapter 6A. 80C. Qualifying amount. We all know she has invested up to 1,72,000. Okay. Maximum restricted to 1,50,000. Maximum restricted to 1,50,000. 80EEA. New house, which we have it ready, 1,30,000. We have done the working and kept it ready, 1,30,000. She cannot claim 80G because the donation is made in cash. She cannot claim 80G. So her total income, comes to 20,83,200. Her total income comes to 20,83,200. Total income 20,83,200. Computation of tax. Computation of tax. Okay. Tax on total income. If you are not understanding, I will again explain. 20,83,200 minus 10 lakhs into 30% plus 1,12,500. Okay, I am repeating. Up to 250 nil, 250 to 5 lakh, 5%, 12,500. 5 lakh to 10 lakh, 20%, 1 lakh. So up to 10 lakh, 1 lakh, 12,500. More than 10 lakh, taxable at 30%. So what I did, 10 lakh 83,200 into 30% plus 112,500. Add HEC at 4%. HEC at 4%. Because it has not exceeded 50 lakhs, surcharge will not come. Total tax payable. It's a comprehensively 360 degrees. We are trying to understand everything.
Sir, can you 1 minute scroll up, sir?
Sure, sir. Up to what level? Please tell me.
Sir, income from business or profession.
What is this 43B all about? It is about statutory payments. It is about statutory payments, which we divided into three: for government, for employees, for bank, NBFC, that is the addition made, and financial institutions. For government, what are all? Any tax, cess, duty. Employer contribution to provident fund, statutory fund, gratuity fund, other funds, whatever government funds. And for usage of railway assets. Only three things to government: any tax, cess, duty, employer contribution to these things, and for usage of railway assets. For employees, bonus and commission, leave encashment. For banks and all, interest payable to banks, financial institutions, and NBFC. What is the provision? If it is paid on 31st, if it is due on 31st March, then the same will be allowed if it is paid before the due date of filing return. If it is not paid before due date, disallow the unpaid amount and allow it in the year of actual payment. Mistake. If in the past year, if in question past year statutory due is paid in 1920, mistake, 1920, it should be 1920, then allow it as it would have been disallowed in that earlier years. So these are statutory dues. Now we will see how the practical application of it. You will love to do this question and then understand it. Okay. The gross profit of P Limited is as follows: sales, GST 150, other expenses, net profit. Information: out of the GST amount debited in P&L, 40,000 is paid in 1920 itself. So what is due on 31st March 20 is 1,10,000, because 40,000 is paid in that year itself. 1,10,000 is due. Balance 1,10,000 was due. This has been paid in two installments, August and October. So 55,000 they have paid. 155,000 we will allow. Other 55,000 is disallowed because it is paid in October and it will be allowed only in 2021. Other expenses include bonus provided on 31st March. The whole of such bonus is paid in September, good, except bonus of 40,000 as employee was not traceable. So disallow this 40,000, not paid within due date. Not paid within due date. This was reversed, but we will do it now itself. Other expenses include electricity bills paid by the government, but paid only in November 2020. No disallowance because electricity bill is not a statutory payment. What is statutory payment? Railways it is statutory payment. We saw only for railways it is a statutory payment. Electricity bill is not a statutory payment. Even if it is paid after due date, it is allowed. Okay. Items not considered above. bonus for the financial year 18-19 paid in December 19. Now you should allow, because in 18-19 you would have disallowed. Customs duty of financial year 18-19 paid now. Leave salary of financial year 18-19 paid in October 19. All these three things should be allowed. Due date is 30th September.
Sir,
Listening?
can't we claim EB bill under section 37, sir?
Yeah, we can claim. We have claimed. We have not disallowed. That's what I'm saying.
Sir,
We have claimed it already.
so the customs duty is paid in Jan 2020, no, sir?
1920 year financial
Okay,
year.
sir.
So all the provisional norms up to 43 are over. Okay, let us come to presumptive taxation. Let us come to presumptive taxation. 3 sections, 44 AD for small business whose turnover does not exceed 2 crores. For small turnover, 8% of turnover, and where the transaction is only electronic and received before due date, okay, 6% of turnover. Okay, 44 ADA, professional whose gross receipt does not exceed 50 lakhs, 50% of gross receipts. GTA, goods transport operators who does not own more than 10 vehicles any time during the previous year, not during any, okay. For HCV, 1000. For LCV and MCV, 7,500 per month per vehicle, and part thereof, even one day will be taken as 1 month. Date of putting it into use will only be taken. The beauty is all expenses are deemed to have been allowed. All expenses under section 30 to 37 are deemed to have been allowed. Repeating, all expenses under section 30 to 37 are supposed to have been allowed. Even unabsorbed depreciation is deemed to have been allowed. You should not separately set it off because it is there in 30 to 37. Where assessee wants to declare a lesser income, then maintain books and get them audited. Why I am highlighting it is because of this point. Due date 31st July if you are opting for the scheme. Not opting for the scheme, your audit becomes mandatory, so 30th September. So 30th September. Advance tax provision is applicable only for the last installment. Read through. Darshit Kothari provides you the following detail. Compute income under presumptive tax and the tax payable, assuming that he has not paid any advance tax and return files on June 2020. Get ready, 360 degrees understanding awaits you now. He is running a retail shop with a turnover of 1.5 crores, 8%. He is also a consultant engineer, gross receipts from profession. He owns 5 cars and 1 HCV for whole of the year. He has not maintained book. However, due to maintenance, the HCV was not used for 3 months. In presumptive taxation, I will tax for the entire period. Date of purchase is only relevant. Full year I will tax it. Darshit has purchased an electric vehicle for his business purposes at a cost of 11 lakh on 1st July 2019. Loan was obtained from State Bank on the same date to the value of 8 lakhs, 8% interest. and 3 lakhs from his friend and paid 10%. I am talking about 80 EEB, a new section. I am talking about 80 EEB, a new section in amendment. In the amendments, you will find a new section 80 EEB available for individuals. Yes, Darshit can claim. Assessee has taken loan for the purpose of electric vehicle. Yes. Loan is sanctioned after 1st April 2019. Yes. Loan is from a recognized financial institution. So, whatever is the interest paid to State Bank only he can claim. Interest paid to his friend he cannot claim. Repeating, loan should be taken from a recognized financial institution. In the question, we found that the vehicle cost is 11 lakhs, 8 lakhs taken as loan from State Bank of India, for which he can claim interest as deduction under 80 EEB, whereas 3 lakhs is taken from a friend personally for the shit. That friend might be a financial institution, but for government it is not a financial institution, so you will not get that. Quantum actual interest are rupees 1,50,000, whichever is less. This is for promoting green environment. We have introduced it from 1920. So whenever there is an amendment, there is a possibility of questions. So we have one more questionable areas. Okay. So this is brought forward loss from retail business, which can be adjusted, whereas brought forward unabsorbed depreciation cannot be adjusted.
சார் 80,000 தானே சார் லோன் அமௌண்ட் போட்டிருக்கீங்க?
8 lakhs இல்ல? ஓ அந்த क्वेश्चनல சாரி ராஜா அந்த 0 மிஸ் பண்ணிட்டேன்.
சார் ஏன் சார் லாஸ் மட்டும் அலோவ் பண்றோம்? பிசினஸ் ரீட்டைல் பிசினஸ் லாஸ்.
ஏன்னா 30 to 37 only speaks about unabsorbed depreciation. Loss is only in the chapter of set off of losses section 72. So loss is allowed whereas unabsorbed depreciation is not allowed.
So but books of accounts maintain பண்ணாம எப்படி சார் லாஸ் மட்டும் கம்ப்யூட் பண்ணிருப்பாங்க?
This year only he is not maintaining books of accounts. Probably in the past years he has maintained it.
Okay sir.
I want all of us to understand it. I told you, we are understanding completely. At any point, if you are not understanding, we'll come to that chapter also once. But I want you to understand. This tax is nothing but the same formula which I gave you, minus 10 lakhs into 30% plus 1,12,500. Okay, that is up to 10 lakh, 1,12,500, 17,44,000 into 30%.
Sir, please scroll up, sir.
You want me to further scroll up? I will.
Sir, HCV is taken for 12 months, sir.
Yeah, that 3 months repairs you should not. When books are not maintained, it is always for 12 months. If in our regular classroom we saw purchased in June but put to use in August, we started from June or July, whatever it is. We started that month itself. It is not put to use it. Whenever, how many ever months you hold it, for that months I will complete. I want class to understand. I want class to understand. Later we can understand it more, but generally, as I told you, time to recollect. If you don't recollect, we will add interest. 234A, belated filing, not applicable because he has filed within due date. Okay, taking July as the due date. Taking July as the due date, my dear friends. Okay, he has filed it in June, so 234A will not come. 234B, non-payment of at least 90% before 31st March 2020. So he has not paid any amount as advance tax. So 1% from April to June. 1% per month. Okay, 1% per month from April to June. Okay, into 1% into April, May, June, 3 months. April, May, June, 3 months. April, May, June, 3 months. Non-payment of installments of advance tax since he is computing on presumptive basis, other installments not applicable, only last installment, March 15th, is applicable. Since he has not paid, shortfall into 1% into 1 month. Okay, other 3 installments are only 3 months, whereas 234C, whereas March installment we will do only for 1 month. All provisions over, all provisions of section 30 to 37, 40, 40A, 43B, presumptive taxations. Okay, we have seen it once, brushed it theoretically, did some questions. Wherever you are not confident, redo that question, refer our classroom material or our revision material, will not be challenging. Once or twice, if you read it, you will hit at the answer. Our friend Mr. Ramji, a resident individual.
Previous question, sir.
Raja?
The previous question, presumptive taxation.
ஆமாண்டா ராஜா.
Eligible SSC க்கு வந்து chapter 6 இல்ல deductions claim பண்ணக்கூடாதுன்னு இருக்கு சார்.
எப்போ அப்படி இருக்கா? எங்க இருக்கு? Deductions under 30 to 37 தான claim பண்ணக்கூடாது.
இல்ல சார், section 10A deductionம் claim பண்ணக்கூடாது, chapter 6A deductionம் claim பண்ணக்கூடாதுன்னு இருக்கு சார்.
எங்க இருக்கு? நீ presumptive taxation எங்க அப்படி இருக்கு?
44AD தானே சார் presumptive taxation.
ஆமா, அதுல படிங்க ஒரு நிமிஷம் எடுத்து.
Resident individuals, HUF and partnership firms but not LLPs and who has not claimed deduction under any of the section 10AA or deduction under any provisions of chapter 6A in the relevant assessment year would be covered under this scheme.
Material, study material இல்லையா?
ICAI sir.
தப்பு பாராஜா. Only 30. Further படி அந்த செக்ஷன்.
செக்ஷன் இல்ல சார், அவங்க வந்து பாயிண்டா கொடுத்திருக்காங்க. எலிஜிபிள் பிசினஸ், எலிஜிபிள் அசோசியேஷன்.
நான் ஒரு வாட்டி நான் நீ படிக்கிறதையும் படிச்சிடுறேன் before the next session. I'll also refer to the study material once. But you can claim 80. Practically also I have seen we can claim 80, but I will come back to you. 10AA obviously books இருந்தா தான் 10AA. அதை பத்தி ஒரு but I will come back to you on that. ஏதாவது 80I அந்த மாதிரி சொல்றாங்களா? I will come back to you. Question number 12. Mr. Ramji, a resident individual, furnished the following information pertaining to the year ended 31st March 2020. He is working as a partner in ABC & Co. Received the following amounts from the firm. interest on capital, remuneration. In the beginning of the class, I told you whatever is allowed in the hands of the firm is taxable in the hands of the partner under this head. Whatever is allowed in the hands of the firm is taxable in the hands of the firm under this head. So these two are taxable for Ramji as business or profession. He is also engaged in the business of manufacturing, the profit and loss pertaining to that. On the credit side, GP, interest on bank FD, net of TDS, agricultural income, pension from LIC, salaries, bonus, car expenses, machinery repairs, advance tax, depreciation on car, machinery, net profit. Details of asset are as under: opening balance, machinery used during the year for 179 days. Not a problem, it is there in the opening. Only for additions I have that issue. Additions to machinery purchased by cash in single payment, I will not consider. Purchased less than 180 days by account payee check, I will consider. Second-hand machinery purchased on 12/4 by account payee check, I will consider for normal depreciation. For additional depreciation, I will not consider that. All assets are put to use immediately. 1/5 of the car expenses are towards estimated personal use of the assessee. Salary includes 15,000 paid by way of single cash payment. In February 2017, he sold a house at Chennai. Arrears of rent relating to that house was received in March 2020. Details of his saving: life insurance premium for policy in the name of his major son, employed in a multinational company. For ETC, it is spouse and children. The wordings dependent children is not there, whereas for medical insurance, dependent children. So here you can, sum assured is 22 lakhs, policy taken after 2012, so 10% will only be allowed. Contribution to PPF 80C. Medical insurance for father, senior citizen, up to 50 you can claim. You are required to compute the total income of Ramji. Read through. If questions of such nature comes, first work out depreciation. First work out eligible depreciation. That is where the magic will be. Okay, to work out the eligible depreciation. slightly detailed.
சார்
Saja.
சார் இந்த அடிஷ்னல் டிப்ரிசியேஷன் வந்து லாஸ்ட் இயரோட அடிஷ்னல் டிப்ரிசியேஷன் ஆட் பண்ணோம் தானே சார் 179 டேஸ்னு கொடுத்துருக்காங்க கொஷினில்.
During the year, during last year.
ஓகே சார், ஓப்பனிங் டபிள்யூல கொடுத்ததுனால கேட்டேன் சார்.
அதான் ஓப்பனிங் WDV தான். It can be only during the year it is used for less than 180 days. But for opening WDV, that condition does not apply. You can claim full depreciation.
Yes, sir.
Please understand, 1,38,750 plus 30,000 plus 45,000 into 4 by 5, because 1/5 of the car is used for personal purposes. 1/5 of the car is used for personal purposes. So only 4 by 5 you should take. Repeating, 1,38,000 plus 30,000 plus 45,000 into 4 by 5.
So on the additional depreciation, the opening machinery or is over.
Additional depreciation, your assumption is that has been purchased in the last year and it has been used for less than 180 days. Don't take an assumption like that unless they say when what they are meaning by less than 1 during the current year the opening machinery was used for less than 180 days. Does that mean I can only claim half of the depreciation? No. That provision is only applicable for additions made during the year.
Okay, sir.
அது அமுங்கியோட இதுல வச்சாங்கன்னு தெரியும்.
அப்பதான் ஒண்ணும் இல்லையே கேமரா வச்சாலே தெரியுமே கையிடு
1 minute. Bonus allowed 1/5 of car expenses. 1/5 of car expenses disallowed because it is personal. Machinery repairs allowed, there is nothing. Advance tax 70,000. Depreciation as per books 4,25,000, that is 3 lakhs plus 1,25,000. 4,25,000 is depreciation as per books. Less non-business income. Interest on FD 45,000. Agri income 60,000. Okay. Pension from LIC is exempt always. LIC means it's exempt. 24,000. Okay. Less allowable depreciation. 2,04,750. 2,04,750. Business income 6,18,250. 6,18,250. Focus. Computation of total income. As usual, we are going 360 degrees now. Computation of total income. Okay. House property. Arrears rent received taxable even if the property is transferred within before. Okay. How much is the arrears of rent received? This is taxable in the year of receipt only, 75,000. Okay. 30% standard deduction. 30% standard deduction. Okay. So the taxable component from house property will be 52,500. Business or profession. Taxable income from own business as computed. He has a taxable income from his own business 6,18,250. Interest in the capacity of partner. I told you interest and remuneration of the partner is taxable only under PGBP. Whatever is allowed in the hands of the firm is taxable. 3 lakhs and 2,90,000. 3 lakhs and 2,90,000. So his business income is 12 lakhs and odd. His business income is 12,08,250. Other sources. The question says interest on FD 45,000. Says net interest from FD. Okay. 45,000 divided by 90 into 100. In the case of winnings, divided by 70 into 100. In the case of interest, divided by 90 into 100. So 50,000. So 50,000. Okay. 50,000 pension from LIC is not taxable. Okay. So I am hitting at a point of gross total income. Gross total income. Deduction under chapter 6A. Deduction under chapter 6A. 80C. LIP on son. Law does not specify dependent son. So you can, okay, restrict it to 10% of policy value. So you can see 2 lakhs into 10% because amount paid is higher. PPF, you can see it as 70,000. So I take the total as 90,000 as it is less than 150. 80D, insured is a senior citizen. So limit is up to rupees 50,000. So I can take the entire 32,000. I can take the entire 32,000. Okay. I have considered everything. Yes, I have considered everything. So my total income $11,88,750. My total income 11,88,750. 11,88,750. Computation of tax. I want to take it up. Computation of tax also. I hope up to this we are together working and you have hit the point of 11,88,750. I hope all of us are together at this level, because I want you to understand the tax computation. Okay. 11,88,750 total income. Step 1. Total income including agri income. Total income including agri income, because agri income is there. Whenever agri income is there in the question, remember taxation will be worked out differently. 60,000. So it should immediately hit your mind. Oh, agri income is there. My tax should be worked out differently. Okay. For this, the tax will be okay. 2,48,750 into 30%. 2,48,750 into 30% plus 1,12,500. I have put the total income including and its tax. Okay. Basic exemption limit plus agri income and its tax. Basic exemption limit, okay, 2,50,000 plus 60,000. So 3,10,000. Its tax will be 60,000 into 5%, because for basic exemption limit, no tax. For 60,000 into 5. Net tax. And HEC at 4%.
Sir,
Listening?
sir, for arrears of rent, it's actually taxable to the extent of 70%. So does it mean after the standard deduction, the net amount taxable is 70%? Or
Amam Salakshmi. The net amount taxable is 70%.
okay,
That is why we are saying taxable at 70%, because when I taught you that provision, I did not teach you standard deduction. As a special case number 11 or so, I would have taxed you, I would have taught you that provision. So after that only you learn science. So there we wrote 70%. Why 70%? Not 30% is standard deduction.
okay, sir.
Sir, What about rebate for step 2, sir?
Rebate is only if the total income does not exceed 5.
Okay.
Not
Okay.
stepwise.
So for that arrears of rent, you have mentioned that taxable even if property is transferred before it's. So what do you mean?
See, in 1819, I have some arrears of rent. What happened is, before 31/3/2019 itself, I have sold that property. In 1920, that property is not there with me. But now I get that unrealized rent or arrears of rent. Normally, only when the house property is there, it is taxable. Now I have sold the house property itself in the last year, but preceding years, arrears of rent or unrealized rent is coming now. As an exception, income tax law say arrears of rent and unrealized rent are taxable in the year of receipt, even if you have disposed of the property before that.
Okay, sir.
I'm not going to do this question. I'm going to give you the hint for doing this question. This is again a homework question. Hint is provided. Take down the hints. Ram Kumar is a chartered accountant in practice, maintaining books on cash basis. On the credit side, all these are professional income. Gift received 1 lakh is not a professional income. Dividend from Indian company. You all know up to 10 lakhs it is exempt. Over and above 10 lakhs it becomes taxable at a rate. Interest is business IFOS. Interest is IFOS. Staff salary, rent, administrative, stipend, meeting expenses, depreciation, printing and stationery, net profit. Depreciation as per IT law. Administrative expenses include paid in cash, not allowed. Gift represent fair market value of LED TV which was given by his friend. Not taxable because even though it exceeds 50,000, the gift which are taxable in IFOS are jewelry, work of art, architecture, painting, shares, bullion, like that. Okay, movable personal assets, even as a gift, is not taxable. Okay, so not that. Last month rent of 50,000 was paid without deducting tax. 30% of that amount should be disallowed. 30% of that amount should be disallowed. Okay. Ram Kumar has taken a loan of 35 lakhs for purchase of a house property, which has a stamp value of 45 lakhs, condition fulfilled from a recognized financial institution. Interest paid to 10, payable to 70. So totally 2,80,000. 2 lakh you can claim under section 24, 80,000 under section 80 EEA. Principal amount repaid 1 lakh 80C. Principal repayment of housing loan 80C. Ramkumar paid medical insurance for his parents, senior citizen, allowed. Paid paid 8,500 by cash towards preventive health checkup for himself and his spouse. Even though 8,500 is less than 25,000, but for preventive health checkup, maximum you can claim is 5,000 and it can be paid by cash. Compute the total income and tax payable, which means I want the answer, you have to work it out. 2 questions I have given it as homework in PGBP chapter, which you need to work it out. Okay.